The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 26th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. Hope you're having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go looking at the circumstances of the markets, albeit very quiet out there. We're going to do it anyways. We'll go figure out what the bulls and the bears, the buyers and the sellers are communicating to you and I. And I want you to know that I'm absolutely grateful for your presence here. But most importantly, I'm here to serve you. So feel free, pick up that phone if you'd like, 877-927-6648. Internationally, 727-445-1044. Would love to hear from you. Email steve@tfnn.com. And, of course, inside our Tiger's Den, you can ping me through the instant messenger out there. Let's get things kicked off on this magical and magnificent, marvelous Monday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 14 points. That's trading out at 17,632. S&P's off about 3 points at 2,072. NASDAQ Composites up 8 at 5,039. Russell 2000 off about 5 points at 1161. The DAX is not up. It closed up 7 points. So the DAX, Oktoberfest looks like a little hangover from Friday. Not a lot of movement. The FTSE closed off 27 points for the day. She closed at 64.17. We've got gold stuck at the $3 to the north side, trading 1166. Silver up 8 pennies at 15.91. Light sweet crude trying to break through a level of support. We'll check in on that. That's trading at 44.14. Natural gas down again, continuing to trade lower out there. Leading the charge to the upside, though, it is Priceline. PCLN's a ticker symbol up 60 buckaroonies. That's up 4%. Lending Tree, that's up 22%. That's up 21 bucks. Piedmont Natural Gas, I believe that's a buyout. Up 37%. Ctrip.com, that's on a trip of its own. That's up 21%, up 15 bucks. Google is up a couple of percent. Regeneron Pharmaceuticals up a couple percent. That's up $11. Chipotle up 11 bucks out there. AutoZone up $6. To the downside, we've got Athena Health leading the charge. That's off 12 bucks with 1.1 million shares. To the downside, a number of other pharma companies out here: Avigo, Anacar Pharmaceuticals. BlackRock is trading to the downside. NXP Semiconductor. Let's make sure we look at the semiconductor index out here. Martin Marietta's off 4 bucks. Apple is off 365. I believe Apple's out with earnings tomorrow, maybe tomorrow after the bell out here. Cal-Maine Foods, that's down 3 bucks. So we've got, the market is basically very flat, trading in a very narrow trading range. If we take a look at the ES Mini as an example, and if we just look at the opening range, you'll see that the price point is about 6 bucks from 2061 to 2067 and a tick. Quarter point. So a very narrow range day out here. Price really within inside the ES Mini, just traveling within that 6-point range. So really at this stage of the game, it's certainly it's a good day to not really do much of anything. Just sit on your hands. Not necessarily that very good for intraday trading out there. It's always good to try to pick out those quiet days. Now, if the ES Mini can break above or break below the 2061 or 2067 area, we might have some action. NASDAQ is stronger than the ES Mini. If we just take a look at its opening range, we're trading above that level of 46.15. Its range from 45.99, we'll call it, to 46.15, slightly above that. Still a narrow range with inside the NQ, but it is stronger than the ES Mini. So we'll take a look at the NQ as well. If we look at what took place overseas, let's do that. We don't spend much time looking at overseas here in the markets, but really, the U.S. should truly have handed the ball off well to Asia last night, and Asia back to the UK and others over in Europe. And if we take a look at what actually occurred, if we look at the Shanghai out here, closed up 18 points. That's about a 0.5%. What was the Shanghai doing? Not much of a party. Remember, all of this, in essence, the theory behind it was that, it was what was taking place in China that was moving the markets down. Now, in China, it made a high, Shanghai specifically, on June the 15th out here. Our high in the Dow was May the 20th. July 20th, I believe, was the high inside the NQ out here. And we can see that, it hasn't even made it back to the August 18th down leg, to the top of that level out here on August 18th. It's just trading inside its gap out here. So Shanghai is not exactly saying I buy everything that's going on in the worldwide markets out here. If we go take a look at the Hang Seng, see what it is doing, the Hang Seng, really a similar story. Now, if you take a look at the downdraft here, where's August 24th? Well, made a slight. Here's August 24th. So, where's our markets? We'll go take a look at those. Some of them really back at their highs, near their highs out here. Inside of China, whether it's the Hang Seng in Hong Kong or the Shanghai, those have not been in celebratory modes out here. I would have thought that we would have seen a little bit more movement than what we actually did see here overnight. So that's got to make you say, something to think about. Now, in the case of the Nikkei up 122 points, about 0.6%. But the reality is the Nikkei doesn't look a whole heck of a lot better, right? It's just simply back up towards the August 27th level out here. It's better than the other two Asian indices that we just took a look at. But the reality is this is not necessarily looking strong like bull out here. Let's go take a look at what actually occurred in the FTSE and inside the Hang Seng, inside the DAX out there. We looked at the Hang Seng, but the DAX here closed up 6 points. Looks like very close to a little doji candle out here. It too not anywhere near the highs and it made its high back in April. If we just try to tie to the July 20th level, get a little bit of harmony. July 20th out here, inside the NDX 100, probably the composite as well. When we saw a high, we can see that if I look at retracements out here, just from the July 20th level down to the August 20, well, in this case here, September 29th, all that the DAX has done is made the 0.618 retracement now. Made it with a nice wide-ranging bar on Friday. Today, you've got basically a little doji-style candle out here. You're at the 0.618. No real A to B equals CD patterns, that stick out. If we take a look at the one that you could use as an A to B equals CD pattern, it would tell me that we've got higher to go inside of the DAX. You can see the one-to-one was formed out here, but there was such a shallow retracement, it would be unrealistic to believe that the DAX wouldn't find the energy to get up into most likely the 11,285 range out there, where it would be back at its 0.786 retracement level as well. But we did get it to give us a pausing signal yesterday, not anywhere near as strong as some of our markets here in the U.S. The FTSE, if we take a look at the FTSE, we know that the FTSE is far from its highs from back in 2007 and 2000. That was a consolidation pattern. That's way up here at about I tell you where it was. I thought I had that marked out here. There we go. That's at about the level of about 6,700 and change. We're at 6,400. We can see, though, that what the FTSE did do, if we just take a trend line off of its May 29th candle, and we just go ahead and we use the highs out here, looks like on maybe August 6th, August 7th out here, we can see that price on Friday broke above that trend, and then today really came back and just tested that level. So it tested it, which is what you want to see on any kind of breakout. Now, in the case of the FTSE, if it's able to move higher from this point forward, or at least not come back into the lower part of the range, that would be, we'll call it short-term bullish out here, and that would be on the FTSE. Now, speaking of breaking trends and coming back to test it, or them, If we take a look at what's going on inside the euro versus the U.S. dollar, we have the same real pattern that is set up here. If you take a look at the euro coming back off of the March 16, 2015 time frame, we use the body of that candle, the open of that candle, or the close of the prior day, March 13th. Then we can use both the close of April 13th, the open of May 14th. That's going to run us right into the close of July 20th and the open of July 21st. So we have plenty of touch points to say the bottom, that yellow bottom line out there, is a fairly solid, a very solid, a rising price channel. Price broke through that without any real difficult problems on Friday. And today, the euro versus the U.S. dollar currency pair is trying to get back inside that trend. If it can close, in the 111 area, then we'll say it's back inside the trend, and it can go ahead and make a run. It could go ahead and make a run all the way back up to its rising price channel area. But at this stage, all we have is a rejection and move lower inside the euro. It's going to send the U.S. dollar index higher. I think that's more likely to happen, but we have to take things one step at a time. And that would send the euro back into the August 5th levels, somewhere around the 108, 109 type area. You're trading right now 110.59 out there, and that's what's going on inside that currency pair. If we look at what's going on inside of, as long as we're talking about currencies, let's go look at hard currencies out here. Let's go take a look at Goldilocks. The reality is it's very sleepy in Goldville out here. If we look at the retracement, that's coming off of the most recent bottom on October the 2nd. Go from that low to the high out here on October 15th. We can see on Friday, price had moved down to the 0.382 retracement level. That number, by the way, was 1158, and 1158.10 is the exact 0.382 retracement. We don't see any kind of wide-ranging bars out here. We just see small-bodied candles. That's pretty good. But then I would also say that if once 1158 gets broken, if it gets broken, it should get broken. It probably will get broken. Then we ought to see price move down into the 1137 type area. Of course, we do have a full moon that is coming into being, I believe it's tomorrow afternoon, tomorrow morning. Actually, tomorrow morning, I believe, is when the next full moon takes place. And we know that gold often, not always, but often, and I can't tell you why, I just know that it does, oftentimes, on a full moon, gold accelerates. Well, it doesn't tell us which way it's going to accelerate. It accelerates one way or the other. If I were a gambling man, I would gamble and say it's going to accelerate to the downside out here. But it's going to accelerate one way or the other. Well, it should. And if it does start to accelerate to the downside, then you really ought to anticipate 1137, 1122, 1103. Which could be in store for Goldilocks. I think the real signal comes from hi-ho silver out here. And if we take a look at silver right now, relatively flat, up 9 pennies. Actually looks better than gold. But if I use the same swing point, well, it just looks better than gold. Looks better than gold right now. Now, I'd rather give me a choice of a gold coin or a silver coin. We'll take a gold coin hands down. But on the stock chart, silver looks a little bit better than gold. And that could be a real head fake. Heads or tails. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got, I don't know what we have. Well, we're talking about silver. That's what we've got. That's what we're taking a look at. And we're looking at a version of the continuous contract on my screen out here. So all the contracts are stitched together. This looks a little bit better than the continuous contract out here. And if we go back into the highs out here inside of silver, from back in August 28, 2013. You can see the red line, if you're watching us on Tiger TV, the red line on my chart is just simply a trend line. And we can see that, give or take a few pennies of where we're at right now, that silver, in essence, has really tested that trend line, and that's where it's found some resistance. That doesn't mean that it can't run a bit higher out here, or that I could move the trend line up just a tad. If we take a look at the descending price channel, that's where instead of using the top of the wick, because here we're taking a look at a declining trend. So instead of using the top of the wick or the candle to identify our trend lines, here we're just simply using the essence of price, the bodies of the candles out here. And those are the yellow lines that are going across my screen. So even if silver can move higher, and I mentioned that silver looked a little bit better than gold, what I really meant by that was if we go take a look at the current contract out here, and if I use the same retracement, the most recent retracement, just as we did on the gold contract, not just coming from the October 2nd low out here to the high on October 15th, we can see that it has not even made its way back to the 0.382 retracement. So ordinarily, I'd say that, hey, this is coiling up in order to go ahead and move to the upside out here. I think, if anything, it's more likely just some distribution that's going on. And if we go back and take a look at this longer-term chart out here, going back to 2013, which was a significant high out here. Silver was up at the $25 range. You're at $15 right now. Even if silver can get a little bit of a move, I would anticipate it's going to run into resistance at about the 1650 type area. So maybe another 60 cents, 50, 60 cents out of it, and then it runs into some significant resistance. Now, what I don't know, what you don't know, if I'm right about this, if my conclusion is correct, where does silver pull back to? Does silver run all the way back down to the bottom of the price channel? Is it just a retracement? And we really won't end a retracement in the case of silver. Let's go back now and just take a look at the current contract. I would come all the way back, since it's completed an A to B equals CD, with the 8-point beginning back here on August 26th. That really should be what you and I are using from a retracement level standpoint, so we'll do that. If I also just go ahead and turn on the market profiles, let me do that, let those build. Oh, there we go. What we can see here in the case of silver, so this is good, this is helpful to us. We can see that should silver break below 1570 or above 1613, 1619, by the way, is the top of that swing point, that ought to give us the direction that silver ought to move. Now, if it breaks above 1613, I think we've covered that with regard to the trend lines and the channel lines out there, that we'd be looking at about the 1650 type area as far as where that moved. Now, 1650, I don't know what, I'll go actually take a look at a retracement from May 18th down to the low out here on August 26th, and 1636 to be exact is your 0.618 retracement. So it's probably around 1636 to 1650 where silver runs into some substantial resistance. Likewise, should silver close below, not just trade below, but close below $15.70, then you're looking at 1533. That's your 3.382 retracement. And more likely, I would say it would skip the 0.618 retracement level of 1480 and come all the way back down to where the breakout began at about the 1443 level. Now, the one condition that would say, no, it's not going to make it back to the 0.786 is the top of the swing point from the trading session of August 26. So in the case of silver, upside, we know where resistance is. Downside, with regard to price projections, you'd really be watching the price level of 1474. 1475. If silver were to close inside that, that's what sets off the potential of a move back to 1440 and or 1395 out there. I suspect that is how this is going to play out in both gold and silver out here, which is we've seen, or we're about to see, a short-term or intermediate type high. Now, does that mean you play to the short side? Nah, I'm not really buying into that. Not that you wouldn't want to pick up that type of decline, but we've seen some nice strength here inside of gold or silver. So it's really about seeing how the pullback occurs. It's been nice and strong. Now, if we take a look at some of the mining equities today, if we take a look at Randgold Resources, that's trading off $1 right now. If we look at the chart, it doesn't look like it's too bad. We'll see if these market profiles populate here real quickly. In the case of Randgold, where could this thing pull back to? 66.49 is like in a heartbeat. It can absolutely do that. If it closes below 66.49, then we're looking at 62.44 would probably be your next ideal buy on a light volume retracement into that area. Dow's off 13, S&P's down 2, composites up 10 points. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 14, S&P off a couple of points out here. And I mentioned taking a look at the semiconductor index. And the reason is because it's the only, if we take a look at our core grouping of indices out here, it's the only one that stuck out to me that has a bearish reversal signal. That is at least as of 1:30. And if we take a look at the semiconductor index, and so let's try to figure out why it has that. But first, let's take a look at what the semiconductor index has done. We see a nice A to B equals CD pattern. It made a 1 to 1.272 A to B equals CD pattern. Let's go take a look at what kind of retracement we have. And this would be off its swing point high from June 1st down to the low out here on August 24th. And we can see that right now it's trading right at the 0.68 retrace. Remember, we use these just like Jack Sparrow as guidelines out here. We don't necessarily look for them to hit to the exact tick or the exact penny. out here, but sometimes they do. But that's not how you and I use them. What we do is we use those as general guideline areas as to where price is going to travel to, and then we pay attention to what the buyers and sellers, the bulls and the bears, are communicating to us. And as we speak right now, it is the first bearish reversal signal, quite frankly, that we have seen inside of the semiconductor index, quite frankly, since that C point was made back here on September 29th. So we've basically has completed a Gartley sell pattern. Today is the signal. Tomorrow would be the confirmation, meaning if we were to see a close below wherever today's low session is. Now, of course, I'm assuming, which is a bad thing, but I'm assuming that we're going to still maintain this bearish reversal signal. If we don't, and that bearish reversal signal goes away, what you would anticipate is the semiconductor index moving up to the 706 type area. That's the 0.786 retracement. Okay, so we know that. What we also know is within inside the semiconductors, Texas Instruments, well, we know that there are number of holdings. I don't know why to have this as 0. But the top 10 holdings represent 30 holdings. So the top 10 holdings, 10 of the 30 represent 60% of the index. Texas Instruments being the number 1 level. So let's go take a look at it. Give me a moment here. If we take a look at it, Texas Instruments, TXN, is the ticker symbol. So TXN. And let's go see what it's doing. So Texas Instruments doesn't look like that's what's causing the problem out here. Now, in the case of Texas Instruments, what it has done is it's gotten all the way back up. It's closed this nice little window that was formed with a big gap down with big volume. On April 23rd, there were 22 million shares to the downside, and the price moved up into it with about the same volume, 21 million shares. So you certainly like to see a window, a gap, sometimes referred to as a window, closed like that and repaired. And looks like Texas Instruments is going to go test its high. Now, its high that I'm referring to is from March the 2nd, and that high is 59.99. I don't see any reason, as I take a look at this chart, it's number 1 weighting structure inside of the semiconductors. Now, the one caveat might be, so let's get rid of that line, is it's testing that swing point as we speak, or maybe it did on Friday. Let's check out that volume. Now, that is, I'm referring to as 58.96. So the swing point from March the 2nd had 4.5 million shares. Friday moved into it with 14 million shares. Boy, there is near pushing into a swing point with volume. Today it's actually trading above 59.86, or 58.96, not by much, but and volume has fallen off quite a bit, about 4 million shares. But 4 million shares still going into 4.5, and we're only 138. Texas Instruments is more likely than not going to go test that high from March the 2nd. So that's not the one that's causing the problem out here. And not that it would just be one stock. But let's check out a couple of them. If we don't find them here, then we don't find them. It's some part of the 30 that are out here. If we go take a look at Intel, what has Intel done? Now, Intel has a similar window, has a similar gap to the downside. Price has not closed that gap. In fact, if anything, you got prices basically sitting right here at that resistance level. Now, whereas Texas Instruments was moving into its gap with similar volume, the volume inside of Intel was 58 million shares, and price moved into it with lighter volume, 42 million shares and 39 million shares most recently. Today, 11.2. So this 34.72, maybe it's 35.57, becomes a real struggle, it looks like, for Texas Instruments. I don't see anything that's an absolute failure or anything along those lines, just that we are up at resistance when we take a look at Intel. Number 3 out here, Qualcomm. QCOM, I believe, is the ticker symbol. Let's go see what it is doing. Qualcomm represents about about almost 8%, 7.7% out here. And as we look at Qualcomm is part of the problem. We take a look at its bearish reversal signal. I don't know if they were out with numbers or anything along those lines, but this is obviously reverse course at this stage of the game. What was it running into to allow it to do that? Nothing that I see that sticks out on my screen. Maybe a downtrend flying out here, maybe. But what it is doing, let's just take a look at what it is doing. On Friday, we saw price form a little doji-style candle moving higher with 9 million shares today, back with 7.5. So there's problems inside of Qualcomm. If I take a look at its TAS market profiles out here, looks like Qualcomm is coming back to the 57.75 level. You're at 59.05, so another couple of bucks almost to the downside. If it closes below that, then we're likely to see a move down to about 55, 56, perhaps lower, but that would be the next target, 55, 56. So Qualcomm is part of the problem today inside of the semiconductor. Let's do, you got SanDisk in there. I don't know Avago Technologies ticker symbol. I probably can find it, though. Let's see. AVAGO, Avago Technologies, AVGO. Well, that makes sense. Oh, hello, AVGO. Nobody was home, apparently. As we take out, so Avago also. So Texas Instruments, Intel, no problem. Qualcomm, Avago Technology, problem. Now let's go check out the problem inside of this, and we can see here price is very likely going to head back into the 116 area, which is really back at the swing point from October the 14th out here. If it is moving down with volume, it would need good volume. The volume on the trading day of October 6th, what you'd be benchmarking, that's where price is. It has not made it to that swing point yet, but any close inside of 121.01 says that 116 area is on the way. You'd want to see, if this is moving down with more than 11 million shares, then you're going to get a test more likely of 111.53. So we only looked at 4 of the holdings, but those 4 holdings, quite frankly, 8, 16, and 14, you got 30, 31 and a half, 32, 32%. 32% of the SOX, or SOXL, if you're going to play alongside SOXS, would be to the short side. 32% of the weighting structure is inside those 4 holdings out there. So always make sure, you can find the information all over the place. Just make sure when you're trading any of the ETFs, just do as we just did here. Go back, understand the weighting structure. Make sure you look certainly at least what represents 50% of them. It's really typically not a lot of work out there. I have a question, newsletter subscriber asking me if I could explain what I'm seeing inside of the CFTC data for gold and silver. So I will do that for you. So you're going to get the benefit of something that we track inside of the newsletter service out here. And this is going to answer your question, which you might have had. Well, why did I sound so bearish, I suppose, on gold or silver? Why did I think that it was going lower? Well, here's the reason. This takes a look at each Friday at 3:30 p.m. The CFTC releases historical data. In this case here, it's as of the prior Tuesday's close, the futures contract information. Now, we got to take it. So how do we read this information? And many people break it down and look at it differently. What I found, just simply by being able to apply it to a chart, is when we take a look at silver specifically right now, that's the chart that's on my screen, what we like to take a look at is what are commercial traders. They've broken down into 3 areas. Commercial traders are the big traders out there, and they're presumed to be the smart money, and I'll call them the smart money. They've got plenty of money to begin taking their positions. So it's always good to see what they're doing as they are taking their positions. Now, when we see, and we like to measure, I like to measure, what are they doing historically compared to other times in the past, and what is it? Now, in the case of silver, they've always been net short because you've got producers that are selling forward their inventory, things of that sort. So you're always measuring it, or what's best to measure it, by taking a look at what are their positions compared to the total open interest. What's their net short position compared to total open interest? And what we can see is, with the nice move that we've seen in gold and silver, we've seen in the miners here, and that was really coming off of the bottom. This is back here at the end of July. My clients and I went ahead. We recognized this. We got into some of the mining sector for a while. And what we can see here is that these guys, meaning the commercial traders, have really made a beeline to really get on board net short positions. Now, what I will tell you is, just coming back into the over a year ago, so about 15 months, the levels that their net short position was at, this is back in July of 2014, where we saw a nice little top out here. Remember that longer-term trend line that we were taking a look at inside of silver? Forget the trend line that's on here, because we can draw multiple trend lines. What we can see is last week they had gotten very close to that same level. Well, I'm sorry, 2 weeks ago. As of this past Friday's data, which is the prior Tuesday, well, last Tuesday, a week ago, come tomorrow, we can see that they're up at levels that are as high as back in 2012 out here. I think you and I were looking at 2013 time frame when we were looking at silver out here. So what this says to me is the smart money is betting on the price of silver moving lower. Those are the positions that they've taken. Now, they can afford to take positions early. That, in essence, is what they do. That's why they're the smart money, and they have plenty of it. For you and I, it's not always the same way. Is this a guarantee? No, it's not a guarantee. There is no guarantee that I know of that's out there. But what this does tell me, especially as we come into these resistance levels, what this tells me, this is a weekly chart that you and I are looking at, is that the next move in silver, next significant move in silver is going to be to the downside. It doesn't tell us how strong. It doesn't tell us whether it's a major top. I didn't anticipate with the way that metals had moved off the bottom for the commercial traders to ramp their net positions up so quickly and back above levels that we saw, just about 15 months ago. Now, can it move higher before silver moves lower? Yeah, it most certainly can. It can get all the way back, get back as far as it wants, but it most certainly can get back into the 2012 levels out there. Maybe that's what they're doing today. Maybe that's what they did Wednesday, Thursday, Friday, today, and tomorrow as they build those positions. So this says that silver, the next major move inside silver, is going to be to the downside. Now, when I take a look at gold's COT data, we don't have the exact same message out here. Because if we take a look at, now they have the commercial traders have absolutely been ramping up their net short positions. They're not as high as, let's say, back in August of 2014, nor is it back at the highs back in February of 2015 out here. But nonetheless, they're ramping up in a large way. And so, how I would read this, I actually did I didn't include it in the newsletter service, Danny, but I did some work on taking a look at the U.S. dollar index, and it looks to me like they're actually anticipating that the U.S. dollar index is going to be moving higher. Now, we know that typically gold moves in the inverse direction to the U.S. dollar index, but not always, and most certainly not as of recent out here. So I'm going to just simply defer to what these two charts, gold and silver, are telling us, and they're not telling me that the next big breakout in gold and silver are about to get underway out here. And that means then that the mining sector is likely to be under pressure out here. And the best way for us to determine whether or not it's just going to be a normal pullback is going to be based upon volumes as things come back to swing points, retracement levels, TAS market profiles, some area of support out there. That's my read based on the information that I've got out here. So, Danny, let me know if that assists you. And if not, I'll recover something. In the meantime, let's go out to Kansas and speak with Ed. Ed, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing good. I'm looking at a company called GoPro. They have a lot of cash, and earnings will be coming out tomorrow night. What do you think? They can pop or drop?
Well, are you in it, or tell me what you're doing?
I've been looking to get into it. I see they got no debt whatsoever. They got a good product. PE's not that high compared to Amazon. Amazon could be the next Enron.
I'll tell you. I'm going to put this on a weekly chart for you. So let me give you the technical take on it. So it has nothing really to do with the product, and instead, which is a great fundamental thing. I don't own one. Do you own one by any chance?
No, but I was thinking about getting one for Christmas with a grandkids.
Oh, yeah, absolutely. Well, we're going to be, if I can ask you to hold on through this break here, we're going to be going to hard break in a moment. And when we come back, what you and I are going to notice is that people love the product, but shareholders are not in love with GoPro. And I think your question more so is, what are the shareholders doing? And this has come all the way back to the IPO date, to the low of that, which was 28.65. You're at 28.67. But hold on through this break here. We'll give you downside projections, upside projections. All right, my friend?
Okie dokie.
All righty. That's Ed in Kansas. We'll go take a look at GoPro when we get right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. The Dow's off 18. S&P is down 4. We're on the line with Ed in Kansas. And Ed is considering taking a long position inside of GoPro. Now, they're out with earnings. You said they're coming out with earnings tomorrow, Ed?
Yeah, tomorrow they come out. Like Apple comes out tomorrow, too.
Got it. So, if the first thing is that I would say, if we take a look at, they're part of the NASDAQ, if we just simply take a look at the Qs out here, we can see that the Qs have made their way almost all the way back to their all-time high, July 20th. So they've made their way all the way back out here, and it's been all about tech this year, right? The industry that has the most has made the most advance, maybe 2, 3, 4%, something like that, is the Nasdaq Composite, the NDX 100. Yet if we go take a look at GoPro, GPRO, this thing is all the way down at its lows. And by lows, I'm just simply referring to the IPO date out here. That IPO took place on June 26th, and the low of that day was 28.65. And you're trading right around that level. You're 1 penny away from that as we speak right now. Now, what I can tell you is that GoPro has been moving lower with less relative weakness out there on the daily chart. And that typically can be a sign of an equity that wants to either form, in this case here, because it's moving lower with less relative weakness, that it wants to form a bottom out there. So it's given the first indication, as it's making a 100% move. That's what we refer when price comes back to a swing point, that maybe it does want to move higher. But your confirmation of this, and I would not get in front of this freight train out here, this has been a freight train to the downside. Your confirmation of this, Ed, would be if it could close above $31, $30.97 to be specific out here. Just because. Go ahead.
You know how to read them options? Do they tell you on options what they're playing? Or do they still? Because eventually they got to cover.
Yeah, I don't know what the short position is on this equity, and I don't have enough time here in the next 2 minutes to pull that up. But I will tell you that if you call back in during the next hour, David White can probably cover that for you. Plus, he's our technology expert. And so
maybe you can pass it along to him, because that's a good question, because eventually they got to cover.
Yeah. Well, again, you're looking at this from the long side, right?
Yeah, I'm looking for like the next YouTube to get bought out by Google.
Yeah, I don't know. I can tell you, I think that the most fundamental aspect of what goes on inside a company, nothing to do with their debt, nothing to do with their sales, nothing to do with their profits. It is, what does it have to do with what the shareholders are doing? All right, my friend?
Okie dokie.
All righty. Thanks a lot. Have a great day. That was Ed in Kansas out there. Let's take a look at, as we go into the close here, what should we, the one thing we haven't looked at is the summation index, and that is with the price oscillators looking at the New York Stock Exchange, the Nasdaq Composite, the Dow. That's the left-hand panel. Then the one to the right of that's a composite. One to the right of that is the Dow. Over on the right-hand side is the S&P 500. We still have a falling price oscillator out here. Nothing's below zero, so the bears do not have control. I didn't need to tell you that. You already knew that out here. But the bears are getting awfully close. The Chicago Bears, I suppose. And, of course, I didn't see what Chicago did. Did you see that Miami game yesterday? Was that a first half or what? That was a first half out there. In any event, folks, stay tuned on this magnificent Monday. David White, as I said, he'll be up next. After David, it's going to be the Tom O'Brien Show. It's a sleepy Monday, but tomorrow is Turnaround Tuesday. I just can't tell you which way it's turning around just yet. Have a great day, and I look forward to seeing you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.